Podcast Network Asia.
First Metrosec is providing this podcast as a general market commentary. Reference to any specific security, product, or entity do not constitute as an offer or a solicitation of an offer to buy or sell any financial instruments or to participate in any particular trading strategy. The statements, comments, views, or opinions expressed by the hosts are subject to change without notice, and First Metrosec is under no obligation to update, amend, change, or correct any of the statements, comments, views, or opinions expressed. The statements, comments, views, and opinions expressed by the guests are their own and do not necessarily reflect the view of First Metrosec. First Metrosec disclaims any liability arising from reliance on or reference to any information obtained in this podcast.
You are listening to First Metro Securities Philippine Stock Market Weekly Podcast, where we feature timely and relevant discussions on the Philippine stock market and the economy in the hope of providing you investing and trading guidance. Here's your host.
Good day, everyone. Thank you for tuning in this podcast. This is JP Billones, a proud market educator at First Metro Securities and the Business Development Section Head for Mindanao. I'm thrilled and it's a pleasure to be your host in this podcast. Our primary mission at First Metro Securities is to equip our clients with the general public with essential investment knowledge, empowering you to make informed financial decisions. As a stock brokerage firm that educates, our mission is to simplify financial concepts so you can easily understand investing, especially for those who are still starting their journey. Whether you're a seasoned trader or just starting your investment journey, this episode is packed with actionable strategies and invaluable insights to help you navigate investments with confidence. Joining us today as our esteemed guest speaker is the one and only Miss Ruth Chaneco. Currently, she is a training manager at First Metro Asset Management Incorporated, our sister company under First Metro Investment Company. She has 14 years of training experience in the financial services, be it investment, insurance, and BPO industry. She is a chartered wealth advisor as certified by Wealth Management Institute. She is also a certified investment solicitor for mutual funds and a graduate of the Trust Operations and Investment Management course by the Trust Institute Foundation of the Philippines. She completed her BS Mathematics degree, minor in education at the Polytechnic University of the Philippines, Manila. So buckle up, get your notepads ready, and let's embark on this journey to become informed and empowered investors together. Hello, Miss Ruth. How are you doing these days?
Hi, JP. Good morning. Feeling good and excited. Thank you very much for inviting First Metro Asset in this podcast.
All right, and we're also very happy that you accepted our invitation to be our guest speaker in this podcast. I'm sure our listeners are already excited to learn from our guest expert. So to start things off, Ms. Ruth, can you tell us a bit more about your journey in the world of investments and what led you to specialize in mutual funds?
Thanks, JP. I initially worked for a Canadian financial institution under a wealth management division in 2007. And that was around the recession. Many of the financial services were being transitioned here in the Philippines. Then I moved to a training role, which required me to specialize in the business processes, act as subject matter expert for wealth management products like segregated funds. In the Philippines, segregated funds is like a mutual fund, but there is a guaranteed maturity and that benefit value stated in the contract. In 2015, I was given an opportunity to work for a local asset management company, and that's where I started specializing in mutual funds, training our agents and distributors. In that work, I traveled a lot locally, and this exposed me to different people and helped me promote a better understanding of investments like mutual funds.
All right, great to hear that, Miss Ruth. And I myself, I look forward to that breadth of experience as well in the local market. And not only just our listeners, but also me as well in this podcast as host. I'm looking forward to learning from you. Now, from your experience po, what are the common misconceptions Filipinos have about mutual funds?
I think the number one misconception is that they assume mutual fund to be expensive and complex investments. It used to have high minimum in the past until SEC set it to 5,000 pesos. Before, only the affluent would know about mutual funds because they know the value of investing. Another misconception that I observe is that Filipino people think mutual funds are risky because they're all invested in the stock market, and that mutual funds do not offer fixed or guaranteed returns.
Yeah, I agree with that, Miss Ruth. And we're happy that FAMI actually also, no, in line with SEC, they lowered their investment to just 5,000 pesos. Now, that's really good, no? But because that enables Filipinos to really get started investing. And yeah, I think talking about, as you mentioned a while ago, about mutual funds are risky. I think that's the other way around because actually, when you're invested in a mutual fund, it lowers your risk because essentially you are invested in many assets that you would not have been able to do so at that low amount. So we're grateful for mutual funds for doing that for us. Now, these misconceptions probably tell us that Filipinos are not yet familiar with mutual funds. To set the stage for our discussion today, can you share to us what they are and how they work?
I agree with that, JP. So let me talk about what mutual funds are. Mutual funds are managed investments. When you invest in a mutual fund, it's like you're owning a business that profits from many instruments like stocks, government and corporate bonds, time deposits, and so on. It's also called pooled fund because the cash of many investors are combined, and this is entrusted to a professional fund manager that has specialized training to maximize the fund's returns.
Yeah, that's great. No? It's nice to know how mutual funds work. And actually, when we look at the survey by Bangko Sentral ng Pilipinas, they had this financial inclusion survey for the Philippines, and they actually found out that only 1% of Filipinos invest in stocks, mutual funds, and UITFs. And here's another tidbit, Miss Ruth. In the same study, they found out that it was 10 or 11% of Filipinos have actually experienced financial scams. So I find that really funny that more people experience financial scams than actually investing in legitimate investments such as mutual funds. And for me, it's really a great thing that mutual funds has actually allowed Filipinos to invest with even small capital. Now, on a personal note, Miss Ruth, why do you think mutual funds are a good starting point for Filipinos who want to invest?
Thanks, JB. I myself was an investor since I graduated, started working. I started my first investments in mutual funds. Now, I'll share this thought about why mutual funds is the best instrument, probably for those who are starting to invest. Okay, so let's assume that we are looking for good investments. And when you scout for good investments, what you usually do is research, right? So the tendency is for us to ask our family, our friends, unless they are financial experts, they're only going to tell us bare facts of what they know or which might not be enough to maximize your investment. While for mutual funds, we have professional fund managers, and the professional fund managers have access to premium market and economic data, something that an ordinary one like us does not have access because it's difficult and expensive to subscribe to. Plus, our fund managers also have the right financial training to sift through these data and identify income and profit opportunities for pooled funds. And the task of analyzing data, spotting the promising investments meant to maximize the growth of the fund, are all done by the fund manager. So this is something that is being taken away from us. Okay, that's what makes mutual funds the perfect investment solution for those who want to grow their money but do not have enough time or expertise to do what the professional fund managers do.
Yeah, I agree with that as well, Miss Ruth. I myself as well, I'm happy to hear that you started investing as early right out of college. But me, I took my time. I experienced many financial mistakes before I had the aha moment to really start investing. But I think mutual funds is a really good start. I myself started with mutual funds, and actually my first investment was actually in the mutual fund space was actually with FAMI as well. So if I'm not mistaken, it was the Save and Learn Equity Fund of FAMI. That's one of my first investments as well. And I think especially for beginner investors wherein you already appreciate the value of investing, but sometimes for you to make the most of the opportunities in the market, you still have to learn about the skill in researching good opportunities. And I think really mutual funds is a really good start for Filipinos who wants to start investing, even with just a small amount of money. Now, diving into the details, Ms. Ruth, can you explain to our listeners the key differences between mutual funds and what sometimes most people are also quite familiar, especially through the banks? They have this what we call unit investment trust funds. What's the difference or similarities of the two?
Thanks, JP. This is a common question that we get. Both mutual funds and UITF are categorized as what we call CIS or Collective Investment Scheme. By definition, it is an arrangement where the funds solicited from the public are for the purpose of investing in securities, reinvesting, and trading those securities. This include stocks and also bonds. While mutual fund, its unique difference is that it's being sold by investment companies. And therefore, the investments are issued in shares. But right now, we are also allowed to issue it in units. We call that now unitized mutual fund. So some mutual fund investors, when they buy shares, are called shareholders and some are unit holders. While UITFs are issued by trust companies and you invest in UITF through participation. Okay, so trust companies may be bank owned or maybe standalone companies.
Thank you for clarifying that, Miss Ruth, because maybe some of our listeners are confused between the two. But on my perspective, it's like the soul of both are the same. No? They have the same essence, but they're just distributed by different entities, either by a corporation or a trust entity or through banks. Now,
Yes, JP.
uh, yeah,
Or if I may add, which I forgot, no, I think what they are thinking about is because UITFs are issued by the banks, they are BSP or PDIC insured. Okay, that's a misconception. Okay, so whereas mutual funds are issued by SEC, so they're not PDIC insured. In fact, because both instruments are investments, they're not covered by the PDIC insurance. Okay, so these are both not deposit products, so there's no insurance to protect the investments.
yeah. Thank you for clarifying that, Miss Ruth. And I think that's a really good point for demystifying the common misconceptions by Filipinos. Now, talking about these concerns, no, some people or some Filipinos are actually concerned as well with the legalities of mutual funds. Can you share to us regarding the regulatory environment of these investment products?
Thanks, JP. So just to also reiterate earlier, although mutual funds are not PDIC insured, we as a company still need to make sure that we are following ethical principles and also following the rules and regulations governing the selling of mutual fund shares. Now, as mutual funds are instruments issued by investment companies, it is regulated by the Securities and Exchange Commission. Okay. And for us to discern mutual funds from the actual or the real investment scams, we need to understand that these instruments are to be issued under the compliance of the Securities Regulation Code, the Investment Company Act. Okay, and we also comply with the other laws like Anti-Money Laundering Act. Okay, so if we think about it, before when we incorporate mutual funds, it has to be approved by SEC. And when we begin selling or offering mutual funds to the public, it also has to be registered and approved by SEC first. So that's some of the safety net of mutual funds when it comes to investing.
Thank you for sharing that, Miss Ruth. And I think that alleviates really the concerns of many Filipinos when it comes to the legalities of these mutual funds. Now, maybe we can also share, Miss Ruth, to our listeners with regards to people who are offering these types of investments. What are the things that people should ask those who are offering these investments? Are there licenses for these people, or how do they know that they are legal representatives of these mutual fund companies?
That's good to ask JP because right now we are asking how do we know someone is legitimate or not. The easiest way to do that is to go to the SEC website. Okay, there are features there wherein you can look up the name of the company or the name of the individual and see if they are licensed to sell a particular product. So, for instance, you can search for our company, First Metro Asset, and you will see what are our licenses. So we're an investment company advisor and also a mutual fund distributor. If our participants also look up First Metro Securities, FMS also has a mutual fund distributor license. And if you also look me up, my name is different there. Okay, so but my license is also there. Okay, so on an annual basis, just to give everyone an idea, we renew our license and we ensure that we are updated not only about the products but also about the market so that we can also give a tailor fit advice and give proper insights to our clients.
Yeah, great sharing, Miss Ruth. And I actually, if our listeners listen to our introduction, that's the main reason why I introduced Miss Ruth as a certified investment solicitor for mutual funds, because that's actually the license necessary for people who'd like to offer these types of investments. So when someone offers you next time, it's very important you ask them if they are certified investment solicitor, and you can actually look them up in the website of SEC. There's a capital market professional registry system that you can look these people. All right. Now, moving on, Miss Ruth, we've been talking about mutual funds. Can you share to our listeners as well what are the different types of mutual funds available in the Philippines? Maybe you can give us some examples, maybe relating to First Metro Asset Management.
Thanks, JP. I think one thing that I could share is that there are four major types of mutual funds. We have the equity mutual funds, or known as equity fund, and we also have the fixed income mutual funds. We also have money market funds and the balance fund. So, just for us to give an insight about all of these funds, the name of the fund tells us already where they are invested. In fact, the mutual fund companies are guided with that principle that they should have the information of the main investment instrument in the name already. Okay, so let me talk about first the money market fund or save and learn money market fund. So it mainly invests in short-term instruments like time deposits, commercial papers, and short-term bonds. Its duration is less than 1 year. So we're mainly invested in very short-term instruments up to, I think, 3 years. Okay, the next one is fixed income fund. We have the Save and Learn Fixed Income Fund, which aim to preserve the capital by investing in interest-bearing instruments. So those that are giving out coupons like government securities and corporate bonds. Now, fixed income funds have longer duration than your money market fund. So, as a baseline, it is more than 1 year. Okay. Next is the balance funds. Okay, so from the term balance, it invests both in the fixed income and also in stocks. Okay, but one of the main difference of balance funds is that it's not always 50-50. It only has a minimum, and maximum investment, which is 35% and maximum of 65% in a single asset class. Okay, and last one is the equity funds. There are many types of equity funds right now. Okay, so but they mainly invest in stocks. And when we say mainly, it could be around 90 to 100% of the fund. And it's actually the most popular type of managed funds because before you can't access these instruments for as low as 5,000 pesos. Okay, now, I think one of the popular things to remember about equity funds also is they mainly invest in the largest companies in the Philippines. But I also want to talk about that there are other types of equity funds here that we can probably discuss later on, JP. I could go on and on about this one.
No worries, Miss Ruth. We have a lot of time to cover all these funds. But one my main takeaway for that is that the mutual funds allows normal everyday who wants to actually invest in these assets that would have been difficult for them if they're going to do it on their own. And I think what mutual funds do is they take advantage of the economies of scale that people get to participate in those funds. So I think that's a really good thing that mutual funds do, especially for Metro Asset Management. Now, you discussed about many types of funds a while ago. So how can Filipinos or how can our listeners choose the right mutual funds for their specific investment goals?
Thanks, JP. It's actually one of the questions also that we get asked a lot, like what's the best investment instrument for me? And we always go back to asking, what is your investment goal? What is your financial goal? What are you investing for? And when we talk about that, we also ask them the time horizon. Okay, so when investing, we need to consider an investor's timeline or how long they're willing to part with their money. Okay, so simple as that. Now, if their goal, let's say, is to be realized in the short term, say 1 to 3 years, it could be a renovation in 3 years, then we recommend that individual to invest in our fixed income funds. It could be our Save and Learn fixed income fund or the Save and Learn money market fund. Now, if the goal is between 3 to 5 years, let's say we're talking about traveling abroad, okay, so at this point, we recommend a combination of fixed income and also equity instruments, which are present in our balance of funds because you preserve some of the value of the money, but you also allow growth of your money because the time horizon is longer. Now, lastly, if the investment horizon is beyond 5 years, okay, particularly retirement, then that's the reason why we highly recommend equity funds because these are long-term instruments that would be able to maximize the potential, the growth potential of their money.
That's a great guidance for our listeners, Miss Ruth. And I think even on our end, we get that question a lot as well. Because sometimes when Filipinos invest, all they think about is how much will I earn in that investment. But it's actually secondary on how you can earn. It's best to invest in a way, it's a goal based investing wherein you invest in something because you want to achieve this specific goal. And that specific goal would actually tell you already your time horizon. So investing is not, of course, it's about earning the maximum possible amount of returns. But again, that's just secondary because you have to factor in other factors such as your time horizon and your investment goals. And one of the things that's also important is risk. And talking about risk tolerance, so we know that's very crucial for every investor because you might want to invest in, let's say, equities that have greatest potential to earn, but you can only get that high level of return over long periods of time, and you should be comfortable with the volatility of the market. But what if you're not that type of investor? So, Miss Ruth, how do Filipinos assess their risk profile to pick the right mutual funds for their specific goals?
That's right, JP. And in fact, I definitely agree with that. Based on my experience, many of the Filipinos come as conservative investors. Like they don't want the volatility. But they are also aggressive investors because they want high returns. Okay. So how we approach is we ask a series of questions. We ask our investors to answer a questionnaire which will guide them as to what is their risk tolerance. Okay, so it's guided by scores, but what we usually do is upon the opening the account, or they could actually just browse through our website and find out the right mutual fund for you. Okay, by answering questions. So what the individual or the investor would do is will accomplish the suitability questionnaire or just answer the question, and based on their scores, they will be given the type of mutual funds that they will be allowed, or should we say recommend, to invest in. Okay, so it's like a suitability investment profile for them.
Yeah, I agree with that, Miss Ruth, because sometimes there's that dilemma from investors that they don't like to handle volatility, but they also want to to have that level of returns. And I think as professionals, that's our role in the financial industry, is to really guide our clients to what is the perfect investment match for them, because it's a way for us to manage their expectations as well, because everyone is different. So I highly recommend that you take that client suitability assessment form so that you can know what is the appropriate investment for you. And actually, that actually tells you as well what is the investment that is good for you. Now, let's say our Filipinos and listeners are already invested, Miss Ruth. I think one of the key things that we have to discuss as well is liquidity. Now, how easy is it for investors to get their money back out of mutual funds compared to other investment options?
Yeah, that's right, JP. Actually, for our investors, there is just to also set expectation. Some funds have a longer holding period, but the shortest holding period is for the money market fund, which is 7 days. For the rest of the mutual funds, the holding period is around 6 months. Okay? Now, should they need their investments, they can easily redeem their shares anytime. Okay, so although mutual funds have longer holding period, as I mentioned, the term is actually shorter than buying medium to long term bonds or even investing in investment instruments that require you to stay for, say, 5 years, like MP2s. So, in a way, you could put a portion of your investment in a mutual fund, which you see you want to be able to realize immediately, or you can liquidate immediately across or compared to your other long-term investments. So it's also one of the avenues that we see for mutual funds.
So that's a great clarification, Miss Ruth. And I think even by law, when investors and mutual funds want to redeem their shares, I think by law it's also required for mutual fund companies to buy back those shares at a specific NAV PS or net asset value per share. So liquidity is actually really good for mutual funds because you can redeem at your preferred time. All right. Now, these funds in mutual funds are actually one of the key points for mutual funds why it's a good way to invest is to diversify, because the funds, because of its large entity, it can actually invest in multiple assets, and that in that sense the fund manager can actually diversify. So how do mutual funds help investors achieve diversification in their portfolios, Ms. Ru?
Well, let's define diversification first. Diversification in investing means you put your eggs in different baskets, right? When you invest in many instruments and companies, you actually lessen your risk of loss. Okay, not necessarily the risk of default, but one thing to remember is that when you invest in many companies, many instruments, when one of these instruments or companies fail to make money, you still have the other companies, okay, to do that for you. And diversification is a strategy of owning a wide variety of investments. So this mix of investments can be several different companies in equity funds, just like I discussed earlier, or this could be different types of assets, such as a combination of corporate bonds, government securities, and also stock companies in a balanced fund. So by having a variety of investment, one avoids specific company or asset class risk. Okay? So for example, if we only hold a set of stock companies, okay? Let's say I'm invested, just for example, JP, okay? Let's say I'm invested in gaming companies, and suddenly the government revokes their franchise. Then my entire investment in that particular company would lose value. Okay, so the thing is, investing in many stocks costs a lot of money and requires time and expertise. Okay, probably you are aware of this one, JP. FMS does training, okay, on this one, on selecting and also timing your investments. Okay, so the solution is to invest in an instrument that automatically invests in all of these, okay, like mutual funds. Because when you do that, you are already invested in a basket of securities, okay, which means that for equity funds, it's already invested in different stock companies. And when we talk about fixed income funds, then is already invested in all the corporate bonds and the government securities, or a combination of both in the balance funds. Now, Here, you allow mutual funds to invest in a diversified portfolio, allowing you to invest in all of these at an affordable cost.
Yeah, I think that's the best point for mutual funds, that you're able to take part in that diversified portfolio at the very minimal cost. Because imagine if you have 5,000 pesos, if you're going to invest in stocks, probably you can buy two, three minimum board lots of different stocks. So three stocks in a portfolio might not be diversified enough. Siguro you'll have diversification if you reach 10 or more stocks, but definitely three stocks is not diversified enough, right? And even in corporate bonds or government bonds right now, you'll need to have at least 5,000 pesos. So isang bond lang yun. More so if you're going to invest in corporate bonds. Now, if you go through banks, they have higher, like probably 500 or 300,000 minimum. But for example, in other, like for example, in First Metro Sec, you'll need higher. You'll need siguro 20 or 50,000 minimum to participate in corporate bond issuance. So you can't even participate in them. But that's the power of mutual funds, because you get to participate in that for as low as 5,000 pesos. Now, since we're talking about investing, of course, we have to talk about performance of mutual funds. So, Miss Ruth, how does FAMI measure the performance of the funds? And where can investors look at these performance so they can assess which funds they like to invest in?
I want to talk about first where you can find the performance. So for FAMI, you can just visit www.fami.com.ph. But I guess you also just look at the FMS platform. Everything is in there. Okay, so what I want to share this time is how performance is measured. It's actually the same across all mutual funds and other managed instruments. Okay, so the fund performance can actually be measured on a daily basis, and I'm going to tell you why we do it. Okay, it could also be measured on a weekly, monthly, but the standard is to provide information about the year to date performance, the 1 year and annual performance. Okay, and then we also have the 3, 5, and 10-year compounded or annualized growth, and also cumulative returns. Now, how do we compute it? Is simple as ROI, okay, or the computation of your return on investment. Okay, so we just compare the change of the NAV PS of the fund on periods that I mentioned. Okay, so just to give you an example, let's use an equity fund. Okay, so every day we calculate the market value of all the assets in our Save and Learn equity fund. Okay, so when we talk about the market value, all of the stock holdings, okay, of the Save and Learn equity fund. And from there, we deduct the accrued expenses for that day. Okay, so some of the expenses would include management fee for that day, okay, and other expenses. From here, we get the net asset value, okay, and we divide that by the outstanding number of shares, okay, which we get the net asset value per share, or NAV PS. Now, if you're wondering, for mutual funds that issued units, okay, so the computation is NAV po. Okay, so that's one differentiation that you would see whether a mutual fund is issued in shares or in units. Now, what I like to use at this point is when you invest, let's say you buy an instrument, okay, you buy a pen, okay, so for one purpose. But when you invest in a mutual fund, it's like you're buying a pen with 10 to 20 colors in there, okay? So let's assume that one pen is one share, okay? So the price of your pen is the net asset value per share, okay? So that's one analogy that I share, okay? And for you to personally monitor the performance of your investment is to remember the price that you bought that pen, okay? Or the price that you bought that mutual fund, okay? So that your initial investment NAV PS. And the measure of the performance of your investment is how the price have grown, okay? So you can just track, look at the charts, okay? And this is also available. What I like in the FMS platform is that I could measure all of these, okay, by simply drawing lines. Okay, so it's a really good tool that you can look at. Okay, so pinpoint where you have invested and try to drag that line so that you can already identify how much has it grown, or you can monitor it, I guess, in the platform. Right, JP?
I agree, Miss Ruth. And that's very important, especially if investors like to see how well that fund performed. So in the First Metro Securities platform, there's a tab there for performance. And you can see there the 3-year, 5-year, and even 10-year performance of the fund if available. And of course, if you want to look at the year-to-date performance, you can also see that there. So you can see that and access that through FundsMart, which is your one-stop shop for investment funds through First Metro Sec. Now, Ms. Ruth, let's say a person decides to invest in First Metro Asset Management mutual fund. What are some strategies that you can recommend to our listeners?
Okay, I'll be quick on this one. Match your goal, okay, with the fund. Okay, so you have to match the investment horizon with the fund because a lot of us mistake investing into long-term investing right away. But you have to identify again how long are you willing to part with your money, or when are you going to need this money? Because if you need the money for a short term, you don't want its value to be volatile. Whereas if you need the money over the long term, you don't want the value of the money to be insufficient when you needed it. Okay, so that's one principle that we need to remember. Okay, so if you don't match your investment horizon with the right fund, you're putting the value of your money at risk. Okay, so I'm going to share some of these risks. Number one, say you're investing for your retirement and you decided to put them in a money market fund. Okay, so even if you invested your money in a mutual fund, it will still not be enough by the time you retire because your risk there is the risk of inflation. Okay, so your money market fund may not be generating enough to beat inflation. Now, another perspective that I want to also share is, let's say you're planning to or you're investing for your home renovation in 2 years and you decided to put them aggressively in equity funds because you believe they have higher potential return and you have a number, okay, that you're trying to reach. Now, in some cases, yes, that could be possible, okay, with enough experience and time, okay. And I guess the only thing to remember there is that you're putting your home renovation fund at risk, okay, when it comes to its value. Okay, so the next question is, what if you're ready to renovate your house, but your stock market or your equity fund portfolio is in the red? Okay, so there are two questions, right? Are you gonna delay your home renovation, or are you gonna cut down your expenses, right? Okay, so just remember that. Remember when we hit the periods like the pandemic or economic crisis. Okay, so we're really stuck. We left our equity investments, okay, in our mutual funds at that time.
Yeah, thank you for sharing that, Miss Ruth. And I think that's a really good guidance to our listeners because I myself have experienced some clients who mismatch their investment goals with their preferred investment. So again, even though you can have higher potential returns in higher risk assets such as class stocks, but again, it's very volatile. So it depends. Your performance would depend on when you invested. So again, choose accordingly depending on your time horizon. So as mentioned by Miss Ruth a while ago, siguro for anything less than 1 year, money market funds, anything less than 3 years, that is bond funds, then somewhere between 3 to 5, pwede balance funds, then 5 years or more, equity funds. Now, talking all about all of those funds, what are the minimum investment amounts to participate in these funds, Ms. Ruth? Maybe in the context of FAMI, what's the minimum investment that Filipinos can put in to get started?
Yeah, JB, I also want to give example, by the way. Should you decide, what if you thought of maybe I'm just gonna come up with my own equity portfolio? How much would I need? Okay, and the answer to that is it's 1 million pesos. Okay, so let's say you try to match the PSEI companies. You want to invest in the 30 companies. you need to comply with the minimum board lot requirements. Okay, so you need at least 1 million pesos. But when you decide to invest in, let's say, Save and Learn Philippine Index Fund and Save and Learn Equity Fund, the minimum investment is only 5,000 pesos. Okay, so you see that large reduction in numbers. Now, let's say you want to add, okay, it could be a monthly or it could be anytime you want, like on your bonus period, the minimum additional investment is 1,000 pesos only. Okay, but the good thing is at some periods, our marketing also would set promos so that our investors can invest for as low as 1,000 pesos. So I guess our participants or our listeners can also tune in to that announcement. And lastly, to remember, anyone of legal age, 18, okay, and of course has investable funds, can invest in mutual funds.
All right. Thank you for sharing that tip, Miss Ruth. And I guess for our listeners out there, maybe you can like and follow the social media pages of First Metro Asset Management for you to know when those promos are actually done. Okay, so you can take advantage of them. But again, never forget about opportunity cost, because why wait for that promo, no? If you can get started earlier. Because when it comes to investing, time is really gold, especially with the power of compounding earnings when it comes to investment. Now, Miss Ruth, maybe you can share to our listeners as well. Of course, we've been talking about the positive side of mutual funds, but can you share to our audience what are the common challenges that Filipinos might face when investing in mutual funds? And maybe share as well, how can they be mitigated?
JP, I only see pros when investing in the mutual funds, but some of the challenges generally in investing, okay, so not particularly in mutual funds only, okay, a lot of people are investing without having an emergency fund first, okay, so it's important that they have a backup fund, okay, should anything, emergencies, sickness, okay, loss of jobs would happen, okay. Another mistake is people would be investing without making sure that they have a regular stream of surplus. Okay. Surplus meaning their excess funds. Okay. So this is actually the baseline of managing your finances before you invest, is that you monitor how much surplus you have and then eventually you can invest that. Okay. Another is that investing is for those who can part with their money for at least 6 months. Okay. So I think a lot of the mistakes of investors is that they think that investment for 1 month is already long. Okay. So that's one of the challenges, is the mismatch of the expectations when it comes to investing. Okay. And it's important to understand, okay, why Filipinos are doing this. It's actually the reason why with this expectation, okay, a lot of Filipinos are going for scams because it's a very short period but high returns. Okay, so the reason why we try to really educate our participants about how to invest, how to make money in mutual funds by just looking at their net asset value per share and monitor how their mutual fund moves.
Yeah, I think this is a really great insight, Miss Ruth. And I think it's very prudent for our listeners to follow those valuable tips. Because again, there's a certain level. We have this, we call this in financial planning, like there's an order. Like you really need to first handle how you manage your money, then you go to protection before you venture to investing. Now, let's be more specific, Miss Ruth. Maybe we have attendees here who'd like to invest for their retirement. So, how can Filipinos leverage mutual fund investments to support goals like preparing for retirement, or maybe just preparing for the child's education 18 years from now?
Thanks, JP. Well, so the best instrument for that would be equity mutual funds. These are the better investment vehicles when you are growing your wealth to prepare for long term goals. Okay, so like your college education that you mentioned, and also retirement. Now, one of the things that we also want to inculcate, okay, here is because this takes time, okay, it also has a longer investment horizon. Okay, it's not enough to just put an investment now and then forget it. Okay, so what we really suggest is to keep on investing. Okay, in these financial instruments. You can do it on a regular basis, like a monthly, okay, or annually or quarterly basis. And the reason why it is also a better instrument, it's because you don't need to monitor this on a daily basis. It's like you just keep investing, whether it's on your salary period, monthly, or quarterly. You keep on investing while the fund manager does his job in managing its underlying investments. Okay, so think of it. I think I've talked about this in one of our webinars. Think of your retirement fund or your child's education fund as a bucket. Okay, so over time, you want to fill that bucket regularly. Okay, so you cannot expect to have a full bucket by putting some only and expect it to generate a high return. Okay, so that's the investment principle there. You buy shares, okay, with less regard of what is happening in the market, okay, whatever the price is at that time. And just to share, we've done really a lot of cost averaging simulations for mainly our equity funds. And 7 out of 8 times or 5 out of 7 times, the cost averaging wins. Okay. And that is regardless of what is the economic condition. Okay. So it is the biggest advantage. And there are no hidden costs, okay, that will eat up the value of your investment as compared to investing in other instruments, okay? Now, just remember that how much you invest is your capital. It's like for all the accumulated periods, let's say you have invested 2,500 per cutoff. You did that for 10 years for your retirement bucket. So you have accumulated 600,000 of investments. That's your capital. Okay? So that's what you need to remember as your capital. And it's easy to know whether your capital has grown or not because when you look at its total market value, you would see that the growth is, let's say it has reached to 800,000. So the 200,000 difference, that's the growth of your money. Okay? So I think that's one way for us to help them identify where to invest in the long term and also how to identify if their money is growing. Okay. So there you go, JP.
I agree with that, Miss Ruth. Even I myself, I advocate peso cost averaging, wherein you just regularly invest a fixed amount over a fixed time intervals between those investments. Because you'll be able to take advantage of the market cycles, whether the market goes up or the market goes down. For me, it's really better than just buy and hold, like you just lump sum a single amount of money and hold it, because your performance would depend on what price you bought that fund. All right. So it's better to do peso cost averaging, in my perspective and in my opinion. As they say, building wealth is a marathon, not a sprint. And just to hone in on that example, no, I always use this analogy wherein if you just buy and hold, it's just like when you plant seeds on a flower pot. When you buy and hold, it's just you water that plant once and expect it to grow over the long term. I think it's really better to water that plant regularly, or on a daily basis or a monthly basis for you to fuel its growth over the long term. Now, Miss Ruth, maybe you can share to our listeners as well, how can mutual funds be a tool for Filipinos to achieve long-term financial security?
That's a good analogy, JP. And maybe I can also share my experience. So when I started working, our employer is encouraging us to invest on a regular basis. In fact, I started with 500 pesos per month. Okay. And then every year they will ask us, okay, do you want to increase your investment? Because and then you're gonna look at, did my base salary increase? If so, I'm going to also increase. Okay, so we've been doing that, okay, without really realizing its compounding effect and also how much if it has accumulated until I left after a few years. So it's really something that you won't notice. Like when you're doing a marathon, right? You're walking a little bit of jog. You don't really notice that you've already completed a 3,000 or 5,000 kilometer run. Okay. Now, I also want to also share that one of the pitfalls in the path to financial security is not understanding how compounding works. Okay. So think of it, when we receive interest in our time deposits or coupons in corporate bonds or government bonds or dividends from our stocks, what we usually do is leave them in cash. Okay, because we like looking at a bank account with a fat okay, fat cash in there. Okay, now although the mutual funds do not give fixed returns, okay, but these investment companies or these investment instruments, what they do with the coupons, okay, or the interest or the dividends is that they invest these profits again. Okay. So remember earlier, mutual funds invest, reinvest, okay, and trade securities. So that's actually the true nature of how your income compounds over time. Okay. So it's like your money makes more money, but passively. Okay, so while you continue with your career or with your business and with the other activities that generate you active income, your money does that for you. Okay, so I know that mutual funds is just one of the instruments to financial security. Okay, so there's real estate, private equity, direct stocks ownership, expanding your business. But I believe all of these will require a little bit more of your time to manage them. Okay. However, when you invest in mutual funds, it will not interfere. Rather, it will support you in your path to achieving financial success.
All right. Thank you for sharing that insight, Miss Ruth. And I myself, I agree with that. When you earn from your investments, it's easier to really reinvest them for you to fuel more its growth. So it will make your investing time shorter because you're able to add more to your usual investments. Now, since we've been talking about investing, Miss Ruth, now let's try to hone in what's happening in the present. So can you share to our listeners what's your outlook for the market this 2024?
Thanks, JP. So, just to give you insights about the PSEI, it will take cues from the quarter 1 2024 earning reports. Okay, so of the local companies. Next, it would also take cues from the US April inflation report and the BSP Monetary Board meeting. Okay, so just to give you an update, the quarter 2024 earnings are mostly in line with expectations, which is also positive for the stock market. Okay, while the US April inflation ended lower than expected, which also means good. Okay, now BSP expects our average inflation for 2024 to be within the range of about 3 to 4%, which is lower than the 4% forecast. Now, as we know, lower inflation may eventually result into rate cuts and therefore lower policy rates. And lower policy rates will bode better for companies because it also means lower financial costs, okay, and higher earnings, okay, or higher income. Now, given this, according to our fund managers, the rate cuts may be possible as early as August. Okay, so currently our local policy rates remain unchanged, although our BSP Governor Remolona remains hawkish. Okay, and the Philippine inflation rate risk remains on the upside. Okay, mainly due to the rice prices. Okay, and considering this, we think that the macroeconomic condition and the BSP monetary policy is leaning towards a higher for longer rates versus the previous expectation that was set at the beginning of the year.
That's a very valuable sharing, Miss Ruth. So that's the outlook of the fund manager of FAMI for this 2024. Now, talking about that, Miss Ruth, of course, we'll try to provide recommendations to our listeners today. So maybe you have available funds in FAMI that's also available in FundsMart to make the most of this outlook that you just mentioned.
Thanks, JP. Just to also share, we have one of our funds that is also outperforming the fixed income and equity markets, which is the Save and Learn Focus Dynamic Fund. So if I haven't mentioned about this one, but it's also a balanced fund, but it employs a tactical asset allocation. In fact, we can overweight on one asset class that we think will benefit the fund on certain economic conditions. So just to share, last month, it was around, I think, 80 to 90% invested in equities. Okay, so we're overweighting on one asset class depending on what we see, okay, that will happen in the economy or in whichever market will benefit. Okay, so right now, South Focus is more on a defensive play. And when we say defensive play, it invests in high dividend paying companies. Okay, particularly, we also have select financial companies, okay, that we are invested in. So I guess it's a play, okay, of two assets, okay, with that is using tactical asset allocation.
Yeah. Thank you for that, Miss Ruth. And I think that's one of the advantages that Filipinos can make the most out of, because of course these fund managers, they know the market better, no? So most especially if we're just learning how to invest on our own, we can actually make the most of these types because they have a better feel of what's happening to market. That's why mutual funds are really good for newbies or starting investors. Now, let's say, Miss Ruth, you a while ago you talked about, let's say we have investments that give us interest income or dividends that we get from stock. Sometimes it gets credited to our account. Let's say in the First MetroSec account. So for our clients who are listening, na they receive those regular income and it's just staying there as an excess cash to their portfolio, what fund do you recommend parking those funds in? Of course, no, if it's just cash, it's stale, so it's not earning anything. So maybe there's an option for them to park it before deploying it back to their preferred investments.
At JP, what we really suggest here is to invest in the Save and Learn money market fund rather than leaving them in cash and even in savings. Okay. So, say you're putting aside money which you plan to use anytime this year, like you're going to deploy them to your target investment instrument, what you can do is park them in the Save and Learn money market fund first. Okay. Because the holding period is 7 days. Okay. And when you decide to deploy them or deploy the proceeds in the next few days, you can already do that now. Okay. And you will see that its value has appreciated, has earned more in spite of investing it or putting it in the money market fund for a short period. Okay, so just to compare it with the time deposit would set you or give you interest rates based on how long you're going to stay. Okay, but when you invest in a save and learn money market fund, it will not discern you. Okay, so it just gives you what is the net asset value per share, okay, on that day. And you can look at the change in the NAV PS of our save and learn money market fund. And I encourage you to do that. Look at the graph and realize that even if you have not made a move in a year, it will still give you a decent return, okay, than just parking your cash there.
Thank you for that, Miss Ruth. And again, to our listeners, and if we have existing clients out there, that if you have any available cash on your First MetroSec account, again, we can't do anything if you prefer to have it in cash. But as professionals in the industry, we'd like to recommend that you at least put it in money market investments that are low risk in nature, so you don't expect that much return, but at least it earns a bit rather than it earns nothing as cash. All right. So, of course, I understand maybe you are quite quick when it comes to investing. So, maybe if you have, let's say, a certain amount in your cash balance, you can just leave siguro a certain percentage of your usual allocation on how you usually invest. Then, some might be better to invest it in a money market fund to make it earn while waiting to be redeployed to your preferred investments. Now, for clients naman, Miss Ruth, who have existing positions in equity funds, maybe we have listeners today that are invested in Save and Learn Equity Fund. What do you recommend to them considering the market condition?
I guess the most important thing to ask our listeners is how long are they investing in that fund? It all goes back to their investment horizon. Okay, if they are still on the accumulation period, say for retirement, which is 20 years from now, I guess it's better to accumulate more at this point. Okay. But if they will need that money to say less than 1 year, I think they could either wait or move some of their portfolio in a money market fund, or they can also diversify their portfolio by putting some in what I shared earlier, the Save and Learn Focus Dynamic Fund. So it all goes back to when they are needing the money.
All right. Thank you for that, Miss Ruth. This has been incredibly informative, Miss Ruth, and we're grateful that you shared a lot of insights and valuable tips and recommendations to our listeners today. So, can you share some words of advice for Filipinos considering investing in mutual funds, especially with First Metro Asset Management?
Thanks, JP. Now, to our Filipino listeners, wherever you are in the world, remember you don't have to go big or be very sophisticated when it comes to investing. You can start small and conservative, like a 500 and then money market fund. And as long as you have an investable money or investable fund, which you will not need for a year or more, consider putting them in investments. And as you observe how your investment is moving or how your investment works, consider investing in moderate to aggressive funds like balance funds, focus dynamic fund, or equity funds. And if you have no patience or you don't have the time to manage your portfolio, then you can consider investing periodically, like monthly, okay, quarterly, and annually, and really just be consistent investing regularly. And you'll be surprised at how cost averaging paves a better way for some investors than just trying to time their investments.
So, as we close, Miss Ruth, can you share to our listeners again what's one key takeaway you'd like our Filipino audience to remember about mutual funds and their potential for wealth creation?
Thanks, JP. I guess one of the best analogy on mutual fund investing is that instead of you driving to your destination, you take a bus, a mutual fund bus, along with the other investors. This allows you to create a bigger pool of money with better access to opportunities. And our driver is a professional fund manager who will be able to focus on growing the fund and anticipate the risk and manage it. This allows you as an investor to focus your time and energy on doing the kind of work or business that you are most qualified for, while you get to maintain your job or business so that you can actively earn income. Mutual funds help us earn passive income, which will allow us to achieve our common objective of accumulating funds, which will help us become financially secure. Now, because our financial resources are limited, we need to create more avenues to generate income. Okay, and we need to make our money work harder for us. And lastly, we need a fund that matches our goals, investment horizon, and our risk appetite. With this, the risk to the value of our money will be managed well. Thank you, JP.
All right, there you have it, everyone. Once again, on behalf of First Metro Securities Brokerage Corporation, it is truly time well spent. Thank you also to everyone who listened to this podcast episode. And of course, we'd like to thank Miss Ruth Chaneco for being here to share her expertise and provide guidance and recommendations to our listeners. I hope she was able to give you insights on how it is to make the most of mutual fund investing. And I hope you consider investing in the mutual funds offered by First Metro Asset Management. And again, guys, all of these you can access through First Metrosec's FundsMart platform. We hope to see you again in our future events and webinar sessions and even podcast episodes, because over here at First Metro Securities, we put your future first. Have a good day and keep safe, everyone.
Thanks for listening to First Metro Securities Philippine Stock Market Weekly podcast. Don't forget to follow us to get first dibs on our new episodes. For more up-to-date market news and info, exclusive content, and the opportunity to connect with your fellow Filipino investors and traders, join facebook.com/groups/FirstMetroSec and be part of the First Metrosec family.
The views and opinions expressed by the podcast creators, hosts, and guests do not necessarily reflect the official policy and position of Podcast Network Asia, the hosts of the program, or other programs of the network. Any content provided by the people on the podcast are of their own opinion and are not intended to malign any religion, ethnic group, club, organization, company, individual, or anyone or anything.